Thank you for joining me. I'm Alex, and I would like to talk to you about FitBit, or more importantly, I would like to talk to you about what happens when one of the companies you own gets bought by another company. So Fitbit does fitness trackers, and they announced that they will produce a smartwatch, which I don't think will be a significant problem for them. I think that they're fairly similar to the fitness trackers they already produce, that they won't have too much of an issue producing them. And what happened today was that Google announced that they might be interested in buying Fitbit, possibly for that very reason. And that's why I want to talk to you about Fitbit. So current market price is $5.64, which gives them a market cap of $1.5 billion. And obviously they went up 30% on the news of Google maybe possibly buying them at some point. So dividend is zero because they haven't made a profit, and obviously they don't want to waste money that they could be spending trying to grow their business. Revenue is $1.5 billion, which is slightly down from the previous year, but significantly down from the year before that, so that's not looking good. Earnings minus $186 million, which is going in the right direction. They lost $270 million the year before that, so that is going the right direction. PE is negative 10, which means they lost 54 cents per share. And total assets, $1.5 billion. Total liability, $780 million, which gives them a total stockholders' equity of $736 million, which is definitely not terrible. And so I would advise anyone that wants to buy fractional shares in Alphabet, which is Google's parent company, to possibly open a small position in Fitbit. Because what generally happens when a big company buys a little company is that for every share you have in the smaller company, you get fractional shares of what the bigger company is worth in relation. So with a market cap of $1.5 billion, or rather with a share price of $5.64, and Google's share price near $900, you would probably get 0.5% of Google share. No, 5%-ish. You would get 5%-ish of a Google share, which obviously is not that significant, but unless I wanted to open another account at another brokerage, I couldn't buy fractional shares right now, so that seems very attractive to me. Now, what could happen is that Google decides to buy Fitbit for cash, which means that the shares of Fitbit that you just bought will be sold automatically, and they will give you money for those shares. But what is more likely to happen is that there's a stock exchange or a share trade, something, where you get fractional shares in Google or Alphabet for whatever shares you owned in Fitbit, which is the more likely case in most cases. The third option is that you would get a full share for every, say, 20 shares? No, almost 200. Almost 200 shares that you own in Fitbit, and they would give you one Google share for those, and they would give you cash for the rest. But what exactly happens, we don't know yet, and pretty much no one knows because the details have not been made public. We don't really even know if Google is seriously looking at them, but considering that news articles have been written about Google possibly buying Fitbit and the stock going up 30%, I think it's fairly certain. You would think like 70-ish% that Google is buying Fitbit unless they made a mistake somewhere and didn't discover some huge liability that Fitbit has that they didn't know about. But all in all, I think it's fairly likely that Google will buy Fitbit, and that any shares you buy in Fitbit right now will become fractional shares in Google later. We don't know when later is, and we don't know what price they will pay, and we don't know anything really, so do not buy Fitbit with any money that you can't afford to lose, because there is still a huge amount of uncertainty here, and we don't know how everything will play out. But if you're interested in the gamble and would like to buy fractional shares of Google, then I think you should be buying a few Fitbit shares, whatever you can afford to, just write off for the near term. I think you should open a small position in Fitbit and see what happens in a few months. I don't think that anyone should be buying Fitbit right now for the benefit of owning Fitbit, because I don't really believe the company is going in the right direction right now. And I made a video previously about Fitbit of why I sold the shares that I had, and I still stand by that. Obviously, I'm still buying a few shares of Fitbit just because I think that Google is a great company and Google has a great future, and I would like to own a few shares of Google, but fractional is all I can hope for at this point. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.